We are live. Good afternoon, Romulus. Good afternoon, Victory Unit members. How's it going? Did you guys have a good Wednesday? It's hump day, right? Yeah, good afternoon. Yeah, what's up? Hey, good to see you, Tux. Welcome. Romulus is probably working with his microphone right now. You can come back anytime, Romulus. I'll hold down the fort. I got you. Yeah, how goes it? Good to see you, Juggernaut. What's up? Did you guys watch the Victory Talk podcast last night? It was a lot of fun. Yeah, listening in at the gym. Yes. Get those gains. I'm about to hit the gym after this. What's your guys' favorite exercise at the gym? Favorite exercise? I'm trying to think of my favorite exercise. I like incline bench press. Incline bench press is my favorite. Yes. Pull-ups are badass. Those are cool. Yep. Chest dips. Push-ups, okay. Classic. You're at the construction job? Nice. Hey, welcome, Ramius.
All right, let's see. You hear me?
Sound great?
Yeah, I need to restart it. From now on, I'll restart it a few minutes before we kick these off, knowing that my system is kind of messing with it for some reason or another. And, okay, all good. Let me just, give me a second here. Okay. Well, yeah, welcome everybody. We have General Romulus Legatus Greg with you from the Victory Unit Legion. Hopefully you guys have been tuning in and paying attention to the Tuesday, Thursday podcast schedule from Brandon. I'm jumping on there every Tuesday night. Greg jumped on last Tuesday night. We have a nice organization there. And we appreciate you guys coming on to the Traders Town Hall. We're going to be showing something pretty interesting that I believe is going to help everybody. Last few podcasts, the Victory Unit podcast, we've been talking about ideas, giving away trade ideas that the very next day have paid off for everybody. So hopefully you continue to benefit from that analysis. You're learning from it, you're profiting from it, and it's making you better, wealthier, and a whole lot happier. So, all right. Today, I wanted to talk about, everyone's going on and on about Microsoft and AI. AI, as if I haven't seen this movie before. First, Charlie Munger, who is Warren Buffett's business partner for the previous 60 years or so, give or take. He says something wise that artificial intelligence has been around for 30 years, maybe even longer. And he's right. There's nothing new about it. Okay, it's being hyped right now. But you want to be careful of things that get hyped in the stock market, because typically if you're really getting involved in that, if you're kind of going down that road, it's probably only a matter of time before guys like me and Greg come and pick your pocket. Okay?
Not yours specifically, but in the market.
Right. Yeah, but if you get too involved in this, it could be specifically you. Okay? It could be very specifically you that we come and you give us money. And you don't want it. There's no reason to do that. All right? You want to be on our side of things, not on the hype side of things. And the hype is thick right now. 2023 coming to a close, 7 weeks left in the year, mostly. And we have some characteristics and traits that have sort of held up for the entire year. I always find it fascinating that these characteristics and traits, once they kick in, they tend to kind of take on a life of their own until the calendar changes on January 1st. Not always, but sometimes miraculously, the trait and the character will change. Why should it? Why should the changing of a calendar day from one to another be that much different in stock market trading behavior for the following 12 months? But it's amazing that it really does happen often enough where you kind of have to ask yourself, what else is going on out there, huh? Oh, okay.
Sketchy.
All right. Anyway, though, the characteristic and trait this year has been sell everything except for 7 stocks.
Yep.
That's it. I mean, sell your house because your house is now worth less than it was in June of 2022. Sell your gold, sell your Bitcoin, sell your farm equipment, sell your dog, sell your stocks, sell everything but 7 stocks, and buy more of those 7 stocks. Well, that's about the dumbest portfolio management, financial wealth pursuit plan almost that I've ever heard of, other than 2 years ago, put all your money into Bitcoin when it was at 70,000. Or in 1999, put all your money in Yahoo or MySpace. Okay? Those were dumber things to do. But to put so much money, I mean, it's understandable. Trade them, have a small amount of money in these things. Okay, fine. Perfectly reasonable and understandable.
Diversify.
But to get rid of everything else and to concentrate on just 7 stocks is one of the dumbest things I've heard of in my 29 years of a professional career on Wall Street. All right, but that's what's happening this year. That's the characteristic and trait of 2023. Sell everything, buy these 7 stocks. And that's it. Now, back in 1972, 1973, there was an investment technique strategy called the Nifty 50. And it was similar to what we're seeing today, except it wasn't quite as dumb because it was 50 stocks instead of only 7. And back then, they sold everything except they bought these 50 stocks. They were big. It was General Electric, Xerox, IBM, Coca-Cola. It wasn't all tech stocks, though, or one particular kind of stock or another. It was a group of large cap companies, the biggest 50 companies in America, different industries and groups. And that ended in a total unmitigated disaster. 1974, up until that point, was the second worst year in U.S. stock market history, dating back to 1792. Okay? We've since eclipsed that mark with 2008, but we see a bad reflection of what went on back then, except it's even worse because now we're selling everything and we're buying just 7 stocks instead of 50. And really it's down, it's even less than 7 now. Okay, because Tesla is all the way out of the 7. That's no longer in there, so now you're down to 6. And I wonder, just with that, even with Apple's recent rebound from the last week and a half, if that can even be considered one of the 7 any longer because of how badly damaged the stock was a few months ago. So you might be down to 5 right now. And those 5 are Microsoft, Nvidia, Google and Amazon, and Meta. Okay? Those are your 5 AI blasting stocks. So I'm going to show a screen right now. Okay, here we go. All right, you guys should see Nvidia up on the screen. And before going to there, all right, so good. Take a look at this stock here, Nvidia. And now look at the Russell 2000. This is the small cap stocks. Looks a lot different, doesn't it?
That was a good trade.
Look at that.
List, by the way, on the Russell.
Oh yeah, we had that one by the throat. That was fun. It was profitable. So this is a group. This is a basket of Microsoft, Nvidia, Amazon, Apple, so on. And this is a basket of small cap stocks. There's most companies are small. This is where most of them live. When you look at that and you combine it with the losing position in the bond market so far this year, and the losing position of the small cap, the Dow is about flat for the year. You have a year where most investors are down. Most investors in 2023 are losing money because of the NASDAQ, the triple Qs, the big cap tech stocks, the Magnificent Seven, which might be down to the Fab Five right now. They're not up enough to make up for all the losses everywhere else. And the losses everywhere else are massive and they are endemic. They're really distributed evenly and throughout the entire world. It's not isolated just to the United States. If you look at Western Europe, clobbered, Brazil, up a bit, China, slaughtered, on and on it goes. Okay, the rest of the world has been hammered this year for the most part. So the diversified portfolio, the 401k plan, the retirement account, the investment advisor down at the A.G. Edwards office down the street, they're all killing people. Okay, they're all killing people. What's not killing people is these stocks right here. these big cap tech stocks, AI. But the danger and the risk of putting so much into one thing, 7 stocks and now 5, I probably don't need to go into too much more detail about how stupid that really is. Okay?
It's not diversified because Ray Dalio, one of the best hedge fund managers in the world, he talks about having 10 to 15 good uncorrelated return streams. And that's all these stocks. If you're just invested in these 5, it's not, they're all correlated with each other. It's not diversified at all. So if something cracks, you lose everything. Everything.
It just really, I'm glad we don't have to go on about that. Okay.
Yeah.
So if you have all your money, your investable money into these 7 stocks, sell some of them. Not as if I'm saying, you might want to sell portions of all of them and get ready to do other things. Well, number one thing you should do, Greg, why don't we show the link to joining the Legion?
Oh, of course.
I see some of us are in our Legion, our Centurions in our Victory Unit Legion today. Many of you are brand new. I don't recognize all of your names. And so we have a private investment club, a membership that Greg and I run, that Brandon helps out with. And it's called the Victory Unit Legion. And you can join there right now, and you can start to get all this information. You'll get educational material right away, like in minutes. You'll start to get trade alerts. We send you trade alerts. We tell you what we're buying, what we're paying, and how much of our own portfolios that we're putting into these stocks. We tell you when we're getting out of them. We manage exits for you or with you. You get all the research videos, everything all the time. Always emailed and texted right to you. You can also have full access to us, to Greg and myself, and all of the other Centurions in the Legion. There's over 400 of us around the world. So you can join there and get everything you could ever possibly want or need in the investing, trading world. Okay, back to the triple Q. So one of the things you might see here is, as it's going red, this was last couple weeks into late October, you see the volume, how it's jumping, all that jump action? Institutions want out. That's not you and me getting out. We don't have that kind of firepower. That's the big money players. That's the institutions. They want out. And then look what happens when it starts to go up. They don't really want back in, do they? I mean, the price came down, so you might think, well, the financial media and a couple of analysts said this low on October 26th was the greatest low of our generation. After the COVID low, that's come and gone, of course, that this is the next greatest low, this is the next greatest buying opportunity of the 2020s. Well, if it's such a bargain, if it's such a great opportunity, where are they? Why aren't they buying this thing like crazy? Hand over fist, knocking each other senseless, bloody brawling each other to get a hold of stock. Volume should be flying. Volume should be flying if this was such a great bargain, because these people know.
Yeah, what do you think?
They know bargain.
300 million shares on the QQQ?
Absolutely.
Yeah.
Yeah, we're talking millions, way more. But instead, here's what we see. We see it's going almost straight up on steadily declining volume. I mean, look at today. Today is pathetic.
Oh, yeah.
That's got to be probably the lowest non-holiday trading day of the year in the triple Qs. Okay? Probably the lowest non-holiday day, or one of the lowest. It's certainly one of the top 5 lowest trading days of the year. And this comes after this huge multi-day run-up of over 8%. You need to be concerned if you're a bull. You need to be concerned if you're in this. You need to be concerned if you just bought this. You need to be worried about your money right now. Okay? You need to be worried about your money right now. And I don't say that lightly. You need to be worried if you're in this thing right now. To answer the question that I posted to title this Traders Town Hall, Chase or Not to Chase, I think I just answered that, right? I think I just answered that question. So Microsoft is a beautiful picture of what we're talking about. All right? By the way, rising wedge type of action, for those who like to geek out on the names of the chart patterns. This thing's going up, 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 and up, and the volume's not there. Okay? You need to see like this. See that over here? Yeah, where it's going up? You see this? This is it. This is what I'm talking about. It's going up in price, and the volume is going up, and it's screaming. It's screaming higher.
Yep.
That's the institution. That's not you and me. It's not Greg, although he can swing a big hammer out there. But it's not him. All right? This is the big money players who say that's a bargain, and I want in, and I want in now. Get me in any price. Do it now. Buy big. That's what you want to see. But instead, we're seeing the opposite of that. The price is going up like it was, but the volume's not there. They're not chasing this thing. If the big money is not going to chase it, why should you? Think about that. They know more than you and I do. Think about it. Let that sink in. Right, you got to use this in conjunction. Now, we have something called overbought and oversold. Things are overdone on one side or the other, either on the bought side or the sold side. What side do you think that Microsoft is currently on right now? Right. It's about maxed out. Yeah.
People might be asking, well, if I shouldn't be in tech, then where should I be? And I've just been saying I like IEF or the bonds, but where should somebody put their money? Of course, they can join the Legion. That's a really good return on investment. But in terms of like stocks, industries, sectors, what really comes to mind if asked that question?
You got to join the Legion so you can get your trade ideas. That's number one.
There you go.
Do you know how to day trade futures? Because Greg and I do that pretty well.
Yeah.
We make money doing that. Yeah, we make money doing that, and that's all good. So, yeah, I would wait. Yeah, just wait. I'd wait for a buying opportunity.
Patience.
I'd wait for a buying opportunity. You know, when assets become properly valued, when they're undervalued, and you can buy them like a Warren Buffett style, when you buy things that are undervalued, that's when you should do buying. It's not right now. The entire stock market, every asset class in the world is overextended and overpriced. There's no value out there. So you want to be careful of anything, really. You want to be just a trader right now. It's not always like that, but it has been for a while and probably will be for a while. Okay?
That's a really good answer. Thank you.
Okay. Sure. But particularly regarding Microsoft, it closed at a new 52-week high and all-time high today. It did so yesterday, closing basis yesterday. Still hasn't hit a new all-time high intraday. That was right there. Still hasn't surpassed that level of, let's see, that's July 18th.
Didn't the CEO
However, on a closing basis, it did. So there's no way that I'm buying the stock up here.
Oh, no, that's ridiculous.
Okay? Like I don't know. Let me say this emphatically. There's no way that I'm buying this stock up there. No way, no how. I don't care if it goes up and doubles from here. One thing I know is risk. And this, buying Microsoft up here because everyone else is buying it, because it's AI, is so full of risk. Let me show you what kind of risk this is full of. You see this drop in Apple? The biggest, most favorite stock ever? Right. That's what we're talking about here. Okay. Tesla, I mean, I can go on and on. That's what we're talking about here. Time to be super, super careful about big cap tech. All right? Super careful. And the institutions are saying it too. They're saying, well, we're not chasing it. We're not going to be the last chair on the Titanic. All right? That's not going to be us. It will not be us for sure. And don't let it be you either.
Yeah.
Now, with the run-up, we could see a pullback over coming days or weeks in the market, especially the tech stocks. They're overdue. You'll see that probably within the next 2 or 3 days or mid next week at the latest, a pullback. Now, if the institutions meet that pullback with aggressive buying, then you could have something there. But you've got to see them do it. You've got to watch them put their money to work. As the correction unfolds over the next week or two, if you start to see volume jump up again, then you know that they're still not ready. That the lows of October 26 were not the lows they were looking for. They're looking for a lower low in order to put big money to work, and you know what to do. So keep it simple. Don't commit. Don't become a victim of FOMO. Don't overtrade. These are all little things that you should be thinking about. Don't overtrade. Keep your head about you. Be ready to buy on a dip in here. Don't buy the stuff now. And in terms of the longer term, bigger picture, wait for asset prices to become at least reasonably priced. But right now, we're almost, not quite, but we're almost at the most overvalued stock market and really in history. And it never, for years, it hasn't been properly valued since 09 and 10 were the last properly valued stock market scenarios we've had. Mm-hmm. But it doesn't mean you can't get there again. Yeah. You can, okay? It can happen. You're buying a lot of stuff right now. You think everything's great. Within a year, you could be underwater 30, 40, 50, 60, 70%. Yeah. You know, like a snap of a finger, okay? But for right now, the relevant information is do not buy big cap tech stocks today or tomorrow. Over the next couple of weeks, as a sell-off, a correction unfolds and comes in, if the volume is tame and not big and the institutions meet that lower price with a big volume surge, then you know you can jump in there and do some buying right alongside them, okay? There was a lot in a small amount of time right there. I don't have a lot of time tonight because in a few minutes I have to get back on a conference call. I'm having a software issue. Speaking of Microsoft, it's not a Microsoft thing, it's another program, but I'm having a software issue that I've got to work through. But by the way, I had my best day trading futures day ever today.
Oh, did you? Congratulations.
On one, listen to this. On one, I was trading one contract, and you only need 1,000 or either $500 or 1,000, depending on what you're trading. But let's say 1,000 for NQ, if that way you cover it all. So I say to people, look, put 2,000 because you'll have some losses and you don't want to, go so far under the cap that you get bumped right away. Have some cushion in there. So on a $2,000 account, just picture that I made $950 on it today.
Wow.
Today.
Congratulations, Romulus. That's
thank
awesome.
you. $2,000 account. Yeah, one deal
nice
right
payday.
there.
That's
nice.
$250,000 a year if you annualize that.
Yeah, and that's from one contract. And of course, I typically don't come anywhere near that level of return or cash advance on one contract. But I can trade 10, 20, 30 contracts and get, a smaller dollar amount per, but make more per for the day. But I was just doing something today with one contract, and there it was, 900 and almost $1,000 today on one contract on a $2,000 account. So it was a big day. Yeah, big day. And then last week, coming into this week, Greg and I structured a trade, and I'll show you the symbol on that one for those who aren't with in our Legion. This is the symbol. No, I'm sorry. Yes, that's it. I got it.
So
we bought this.
This is the largest size of the year, if I'm not mistaken, right?
Yeah, it was a big size, and then boom, it just lit up the next 2 days, and we cashed in on that. Sold it all yesterday, so we didn't take today's profit along with it, but it was a big size of a trade, and it was a no mess, no stress kind of a trade. It was literally in two or three trading days total that we held that cruiser and then nailed it. Then there was this one too. Short at that one yesterday, right at the close, covered that.
Check out
right
USO, Romulus. USO puts. Look at oil right now, you guys. This was talked about on the Victory Talk podcast. I said,
that was
oil did a bearish reversal. Look for lower oil prices. We shorted the shit out of that. That was a really fun trade.
Yeah, which means that as the red candles are showing, the profit was coming into us.
Yep.
Just if you don't know what shorting means, and that's okay. When you join the Legion, you'll learn it. But for those who don't know, shorting just is a way that we can make money as things go down. So the red candles put money in our pocket for that particular trade. So there you go. All right, any questions? I've got about 2 minutes to answer a couple of them. Then I'm going to have to jet. Hang on.
Questions.
All right, let's see here.
Oh, yeah. We're showing off the textbooks over here. Juicy for You says he's going to be joining in a couple of weeks. Trying to do it as soon as possible. That way you can get the cash flow right away. But we welcome you at any point in your life.
Yeah, you guys
Vinny, nice
definitely take advantage of everything we're doing around here, and we appreciate your support on Tuesday nights, Thursday nights, coming in here on Wednesday afternoons and everything else that you're doing to help the Victory Unit and the whole group over here. We're grateful for that.
Yeah.
All right, like I said, I got to go. Thanks everybody. Hopefully you learned something useful, and I'll see you in a couple of days. Bye-bye.
Peace. Or Pax, as we say in the Legion. Bye-bye. Much love.